stories this hour. Defence Minister's report to President Cyril Ramaphosa on the recent Zimbabwe trip is available to the public. Also say one last suspect in the 255 million rand Free State asbestos tender should take behind bars soon. Good evening, Amananda. After sustained
Good luck. I have no smiles left in me.
has released a report by Defence Minister Lesetja Kganyago explaining why she allowed ANC officials to take a military plane to Harare. Initially, the Defence Ministry stated that the report was for the President's eyes only, but political parties demanded that its contents be made available to the public. Our news reporter Thomas White has more.
Typically, dialogue between the ANC and ZANU-PF isn't controversial, but a brief exchange between the two parties last month made it to the front pages when it was revealed that senior ANC officials hitched a ride on a military plane. Opposition parties have called it a major abuse of state resources, similar to using the National Air Force as an e-hailing service. Succumbing to their pressure, President Ramaphosa instructed the Defence Minister to explain exactly why she allowed senior ANC cadres to hitch a ride on the SANDF flight. Her reasons have now been made public in a letter which Power News has seen. Her justification, which runs for 3 short paragraphs, invokes the COVID-19 pandemic, which she says left the ANC's delegation with no other means of travel. She also points Ramaphosa's attention to, quote, compelling national interests, which she maintains motivated the trip. It's yet to be seen if these reasons will satisfy her political opponents, who could push Ramaphosa to take harsher action for his party's rendezvous with Zimbabwean officials. Thomas White, Power News.
The Hawks say all those implicated in the failed 255 million rand Free State asbestos project revealed that the State Capture Commission should be behind bars by the end of the day. Hawks spokesperson Ndlovu says they're close to apprehending the 7th and last suspect.
We're standing at 6 out of the 7. There's only one suspect that is outstanding. I'm informed that his lawyers have already contacted us. So there might be a move that he will hand himself over today.
While their identities remain unclear for now, the suspects will be named on Friday when they make their first court appearance.
The 7 includes 4 senior managers from government and 3 business people. So far we only have 3 senior managers from Bloemfontein that have been accounted for, and these 3 business people here in Gauteng.
He further says the arrests would have been effected sooner, but they had to give Deputy Chief Justice Raymond Zondo enough opportunity to complete his questioning.
We started the investigation in February. We concluded this investigation by the end of August. We were ready to arrest by then, but unfortunately there was then a hiccup or a request from the Zondo Commission that they wanted to deal with this case before we arrest. So we had to hold back until they finalize their process, and hence today you see this action.
And finally, various parts of Soweto and the Vaal have been plunged into darkness following the implementation of load reduction by Eskom in Gauteng. Areas affected include Bramfisherville, Diepkloof, Orlando and Stratford, with power expected to be restored at 10 tonight. Meanwhile, Eskom has welcomed the first of 6 new steam generators to Koerberg Nuclear Power Station. Spokesperson Sekonati Manjanja says this is part of a major life extension system upgrade.
The first of Koerberg Nuclear Power Station's long-awaited 6 new replacement steam generators arrived at the plant yesterday. These steam generators weigh approximately 380 tons each and are about 20 meters long. The first 3 will be installed into Unit 1 between February and June 2021. They are being transported by road from Cape Town Harbour.
In the markets, the rand was last trading at 16 rand 68 to the US dollar, 21 rand 56 to the pound, and 19 rand 58 to the euro. Gold was last trading at $1,896.58 an ounce, and Brent crude oil at $41.41 a barrel. In the weather for tomorrow, Gauteng is expected to be fine and warm, temperatures peaking at 26 degrees in Johannesburg, 30 in Pretoria, and 27 in Vereeniging. Recapping the top story in Power News this hour, Defence Minister Lesetja Kganyagola's report into the ANC's use of a military jet to Zimbabwe is now available for public perusal.
In power traffic, starting off in Alberton, if you are traveling on the N12 westbound, that earlier crash before the Voortrekker Road off-ramp is still causing delays from the Elands interchange going down towards passing that incident. If you're traveling on the N3 north in Edenvale, you can still expect some minor delays also caused by an earlier crash just after the Linksfield Road off-ramp, and those delays are from the Gululis interchange. If you are traveling on the N12 eastbound as you are headed towards Davidton, those roadworks that are on the go just after the Kingsway Avenue off-ramp are causing delays from Padfontein Road.
Power News. Power to you who envision a South Africa alive. To you who have your ear to the ground of this golden plateau. Immersed in conversations that are yet to be heard. To you who realize and materialize all that can possibly be done under the South African sun. You who won't give up until what's right is done. The time has come to dial into a frequency that allows you to really be you. To you we say power. Power 98.7. Now we're talking. Stay home and stay informed.
When you wash your hands, wash the tap as well so you don't touch the tap and then go back and infect yourself.
Stop the spread. Power 98.7.
Power Business is brought to you by YEP, a digital marketplace for small trusted businesses.
Power Business with Tumisang Ndlovu.
Monday to Thursday, 6 to 8 p.m. and Fridays, 6 to 7 p.m. on Power 98.7.
Bagolo Dumelang, welcome to the special broadcast of Power Business on Power 98.7. Tonight, we are in the company of the Reserve Bank Governor, Lesetja Kganyago, and throughout the next 2 hours, we are going to be live on both Power 98.7 as well as on our sister station that is Capricorn FM. This is in partnership with Old Mutual. The slug is on the Money Talks. We are also in partnership with the Mail and Guardian. Go to our social media pages. The account to follow there is at Power FM 987 to get all the details of how you can stream live into this conversation. We'll definitely be taking your calls, and this is a conversation that you, the Power 98.7 listener, has been calling for with regards to the mandate of the Reserve Bank, particularly in crisis time, given the economic impact of the COVID-19 pandemic. We're also going to speak to the governor about the role of the South African Reserve Bank in terms of monetary policy, and that committee has been cutting rates for the past couple of months since we found ourselves in the corona outbreak. Share your views with us. As always, do give us a call on 0861-987-000. After this short break, we introduce you to the governor of the Reserve Bank. It's not every day that we get to speak to Kganyago. Let me take this opportunity to welcome Lesetja Kganyago, the Reserve Bank Governor of South Africa. He joins us live streaming in the times of COVID-19. Social distancing is a thing. Dumela Kganyago. Absolutely a pleasure to have you online. And I think the biggest starting point for many of us as a South African public is laying the ground of where we stand as a country in terms of monetary policy in the times of COVID-19. It is an unprecedented event in the global scale, and it's been likened to the times of war. Have you done enough as the Monetary Policy Committee here?
Thank you very much for having me this evening. I think that to understand the role of monetary policy in the COVID era, we've got to understand the nature of the impact of COVID on the South African economy. And the way in which it has impacted the South African economy was that we had to see this as a health crisis. And because you had a health crisis, the nature of the response globally from various jurisdictions was to go into a lockdown of countries. that lockdown could be seen as a supply shock to the economy because factories could not produce, lots of industries were closed, borders were closed, so exports and imports were also limited as a result of the lockdown. But because you are in a lockdown, this supply shock caused people's incomes to decline and in some instances to actually become zero. And that meant that the ability of people to spend was now constrained. And so what was initially just a supply shock from the lockdown also became a demand shock. Now, what would be the nature of a response of a central bank when you are faced with a shock like that? And the nature of the response of a central bank would be to respond to the demand shock, because that is what we do. We are in the business of managing shocks from the demand side and managing the economy through the cycles. And so what we had was that we had to put a package of responses as the central bank. And let me walk you through that as a form of introduction, and then we can have the conversation.
Yes, sir.
And firstly is that since January to date, we have cut interest rates by 300 basis points. What would this mean? I mean, in January, before we made the cut, the prime rate was basically 10%. And to put it in perspective for the viewers, if you had a mortgage of 100,000 rands in January, you would have been paying some 975 rands per month over 20 years. With the 300 basis points cut that has taken place, we are now talking about 765 rands per month. What that means is that if you were fortunate enough to have a mortgage, you are having these massive savings, and that is money that could then go and be spent in the economy. The second form of response was in the form of providing regulatory relief to the South African financial sector.
Right.
And we provided this regulatory relief to enable the sector to provide support to households and firms through the restructuring of their loans, and more importantly, that those who are looking for either some form of a holiday during the lockdown or whilst they are sitting at home because their particular industries have been shut down, could receive that support. And I could always walk you through the figures, because people had tended to concentrate on just what we had seen from the loan guarantee schemes. The banks had actually, in addition to the loan guarantee schemes, provided some 19 billion rands to households in rescheduling of debt, and some 14 billion rands to small to medium-sized enterprises as a form of relief. You've got, when we talk then about the support that had come, you've got to add these figures to the loan guarantee scheme, which would be another 15 billion or so. So the total relief provided by the banks is, based on the latest figures we have, some 48 billion rands. The third sort of response had to do with what the South African government was going through. Every week, the South African government funds itself in the bond market. And what we had found was that the bond market was dysfunctional, and there was a risk that the South African government getting into the bond market would not get a fair price.
Right.
Because if there is a market dislocation, you do not know what the correct price is. And the central bank stepped in, provided liquidity, did a bond purchase program, and that brought functionality into the market. And when that functionality returned into the market, we saw the government borrowing costs come down. So this is the totality of the response that we had provided as the South African Reserve Bank. It was forceful, it was speedy, and I would challenge anyone who would say that we didn't respond adequately to say to me by what measure would they think that we have not responded adequately.
And that's where I want us to even kickstart this conversation going forward, because there are calls for even an aggressive approach for the Reserve Bank to take. For instance, one of the examples that have been noted is going even further in slashing rates. In the last Monetary Policy Committee meeting, it was voted upon that there would be a hold on rates, and that the question then becomes, are we reaching, or has the Monetary Policy Committee reached at the end of its slashing cycle, particularly for now, because with inflation not being a worry, a lot of South Africans, analysts as well as business, are asking, could the Reserve Bank be more aggressive?
I have said that we have been aggressive. And let me state this and say the response that we had provided year to date, 70% of that response was provided within a period of 2 months. It was actually provided in March and April. It was very significant, yet it was speedy. And we are not out of line. When we look at the global economies, we actually find that for most of the economies, they have responded in that way. When you then said that inflation is contained and you can act more aggressively, we will continue to provide support to the South African economy as is necessary, using the tools at our disposal in pursuance of the mandate that the people of this country have tasked the Reserve Bank with. And we have been very clear as the Monetary Policy Committee that we cannot react to yesterday's data or today's data. That is history gone by. We respond to what we foresee over the horizon. And we have spelled out this thing very clearly, that over the next 12 to 18 months, we expect inflation to go up, but it is not a worry over the next 12 to 18 months, as it not just remains within the target, and it remains closer to the midpoint of our inflation targeting range. So, as the data comes up, as the economy opens up, and we analyze that data, we would make an assessment of what is the most appropriate stance that the South African Reserve Bank should take going forward. The speed with which we had acted, we had acted for basically, with the exception of September, we have cut interest rates at every single meeting, including calling a special meeting where we ended up having to cut rates. And this is just from January to July.
Another argument that's been raised is with the continuous revision of the expected growth in terms of the economic growth in South Africa, GDP itself, that maybe that is justification for the Reserve Bank to go again and cut rates. Do you support that justification? Do you support that stance?
As we have been revising our figures, and as we were revising our figures based on our assessment, we have responded in a manner that we believe was appropriate, and we think that we have acted appropriately. Growth has been revised lower, but it is roughly in line with what we had actually expected to happen to growth. We expect a rebound in the third quarter of this year, but even with that rebound, and all the high-frequency figures show that we will have a rebound in the third quarter, even with that rebound, it is still going to take us roughly up to 2023 to get back to where the economy was in 2017. That we are in a crisis, and that we have had a central bank that has been able to respond in the manner that we have responded, should not take off the table the fact that even before COVID, this economy had significant structural constraints that we had to deal with as a country.
Correct.
And so this response from the central bank would take place, has taken place, but unless we do the things that we are supposed to do as a country to alleviate the constraints on this economy, we will not be able to lift this economic growth rate from the low levels that we have seen so far.
I would like us to address the other issue that often comes up, Re Kganyago, that is of the notion, in inverted commas, of the printing of more money. And I've seen notes in the media that actually call it magic money. How do you see that argument coming to play, and how do you even get to a point of dismissing it to say that this might not work in the model that we have and the challenges that South Africa is facing right now?
Magic money.
Magic money.
See, you can't do an abracadabra with our economic problems. And think by waving a magic wand called printing of money, then our problems are all gone. But let's just get to this thing, because this era of magic money, and you talked about the printing of money, and people think that what would happen is that the central bank will print money, load it into helicopters, and drop it all over. No, that is not how it actually works. And economic professionals come with complex terms. They call this quantitative easing.
Yes, sir.
And what that means, and I will get to it now, is that a central bank will go into the financial markets and buy financial assets. Those financial assets in the main would tend to be government bonds. Elsewhere, we have seen some of the central bank in the US also buying corporate bonds. And the idea behind this is that by buying these bonds from pension funds and from insurers, the pension funds and insurers are then stuck with the cash. What do they do with that cash? And then they are made to then go around looking for investments so that they can get some return on that money. But if they were to be doing this, and interest rates were, say, 10%, like what we had earlier in the year, and what you then have is that you buy these bonds from the insurers and from the pension funds. They will take that money and just invest it at 10% in wherever, in a bank or wherever, and that takes you nowhere. Which then brings me to the next question: under what circumstances is this tool effective? You see, as a central bank, we have got an array of tools. So far, we have deployed our interest rate policy tool. We have cut rates, and that has provided support. And that works in particular circumstances, and you have spelled it out. Inflation is contained, is expected to remain contained, and because it's contained and expected to remain contained, you could cut rates. And let me remind South Africans what I had always said. Lower inflation begets lower interest rates. The higher the inflation rate, the higher your interest rates are going to have to be. Otherwise, you are not having a functioning monetary system. And so, you can deploy your policy tool in that manner, that is the interest rates. We have had an experience where, because of the lockdown, households and firms were struggling with their debt servicing and so forth. We deployed our regulatory tools to allow the banks to be able to provide the restructuring of the debt. When we saw that financial markets were dysfunctioning, we deployed our liquidity instruments to get the markets to function. When will the South African Reserve Bank deploy quantitative easing a la magic money? Two conditions have got to be met. Firstly, you should be having such low inflation that your inflation rate is threatening to turn to zero or to turn to negative. And when inflation is negative, which means that you have got deflation, it is not good for the economy. Let me put it to you this way so that you can understand. You wanted to buy a fridge today, and the fridge is whatever the price, 5,000 rand. If you expect that the fridge tomorrow is going to be 4,000 rand, why would you buy it today if you are a rational person? And if you expect that next week it will be 3,000 rand, why would not wait until next week? What that would do is that the economy gets into a spiral where people do not spend because they expect the prices to continue to go down. And just as central banks get concerned when prices are rising too fast, when prices are dropping in that manner and are checked out negative, the central bank must act. In circumstances where you are faced with that risk, you can deploy still your interest rates. But if your interest rates are close to zero and they are becoming irrelevant in the decision-making of the people, you have got to deploy quantitative tools. That is when you deploy quantitative easing. And we have seen this tool deployed in the developed world, in the US, in the UK, in any of the G7 countries, because they experience the circumstances that I had talked about. I challenge anyone to tell me a country that had deployed quantitative easing when they have got inflation at 6, 7, or even 10%, and they had their interest rates at roughly that level or even higher. And if ever such a country exists and they were to do that, it can only end up in tears.
Essentially, quantitative easing is not a model that is fit for South Africa. Currently, that's the view of the central bank at this point. There are, however, questions around the ordinary South African that is, servicing debt, whether it be a mortgage or a car or even a fridge, like the example that you alluded to earlier, but in actual fact are not able to even afford that asset that they have bought. And that also brings into question South African culture of not being able to afford to service debt, and therefore, with interest rates going down, meaning that the banks' lending rates going down, it is at a point where questions are raised for whose benefit if ordinary South Africans are still unable to afford the living standards in South Africa.
Let me correct you on your earlier point when you said that quantitative easing is not a model appropriate for South Africa. Quantitative easing is a tool that is available. It's not, let's get these things clear. It's not an economic strategy or an economic model. Right. It's just a tool that you deploy when you are faced with those particular circumstances. South Africa is not facing those circumstances. And at this people point, might differ, we could deal with that. Now, we talked about original South Africans. I'd like to categorize ordinary South Africans into two groups so that we can understand this. The first group are those who, when interest rates were going down, had debt, mortgages or a car loan or some personal loan. I have just spelled for you in the introduction how the ones with mortgages benefited as a result of the reduction of interest rates. I am sure the ones with car loans would have benefited in a similar way, probably faster, because for some reason we like to repay our cars in 5 years and our houses in 20 years, and those which have benefited. So the category of South Africans who have outstanding loans which have benefited from this. There is another category of South Africans. Those who are either savers And the savers, mainly people who are retired, they live on a fixed income, basically interest income. When interest rates go down, their incomes go down. But they tend to be able to look after themselves because they do have some income. But within this group, there is another category of South Africans. It's those South Africans without a job. And who, because they do not have a job, thus cannot even access a loan, because how would they even service the loan? Lowering interest rates does not benefit them directly in that manner. It can only benefit them indirectly. And the indirect way in which it would benefit them is that the lowering of interest rates would lead to a recovery of economic activity. And as it leads to a recovery of economic activity and people spend and businesses invest, then jobs are created, and then they will tend to benefit in that manner. But our analysis shows that even that benefit will be a short-term benefit unless there is a fundamental change in the structural aspects that are constraining growth in this economy. So that is what you face. So when you talk of the ordinary South Africans, we've got to distinguish about those who are borrowers and those who are either savers or are simply not even having an income. And if you are having no income and thus cannot have access to debt and thus do not have debt to service, you do not see the benefits directly from the reduction of interest rates. They only come to you indirectly through the interest rate cycle supporting economic activity.
Kganyago, is there more to be done and room, therefore, for the South African Reserve Bank to do more to mitigate in line with the state's policy? We are awaiting a document from the presidency about economic recovery post a COVID-19 scenario. Is there more for the SARB to do to mitigate against the global COVID-19 pandemic, on the impact of it on the South African economy?
Remember that we have got limited tools. I've spelled out the tools that
given the mandate,
and we deploy these tools. We have been categorized amongst the central banks that reacted aggressively to these things. We, in the emerging market universe, we are number 3 in terms of the speed and the scale at which we responded to the crisis. It's because we understood what this economy was actually facing. I have not seen the president's the recovery plan that is coming, and that it is being negotiated in Netherlands. But if that recovery plan comes and it does not deal with the constraints that we have, then it's going to fall flat. And let me explain this to you in this manner. We have provided relief. In July, the economy was not even at lockdown level 2. I think we were at about lockdown level 3. The economy was just opening up. In July, we experienced electricity load shedding.
Yes.
With an economy that we experienced economic load shedding. Now, somebody tell me that electricity is not a constraint to growth then. And what would monetary policy do about a shortage of electricity? That's not the kind of things that you solve with monetary policy. And this idea that you could throw in every problem at monetary policy and expect that it would resolve it is exactly what people think about this magic money, that all that you have to do is monetary policy to solve these things. We have spelled out these things. South Africans like debating the problems that we face, and we like coming and proposing solutions, and the ink would have hardly dried before we say this plan needs further conversation. From where I am sitting, we need to put a plan. The plan must be a credible plan that is implementable. And for once, can we just go and implement it and not sit and debate it?
That time is long overdue, Governor, and you saying this actually brings into my mind the questions around whether there is union and unionism within the South African government structures, from the finance ministry to the president's office and the South African Reserve Bank. Are there conversations that are taking place that would allow for the South African Reserve Bank to be a critical part of these conversations when it comes to devising an economic recovery plan for the country? There is an assertion currently and a debate around it that it seems like the structures of government are working in silos.
Well, I'm sure they are coordinating. I can talk about two things. I now and then would brief the president about the state of the economy. And, as a former Director General of the National Treasury, it's always tempting to say to him, I think you must do this and this and this with the fiscals. But the guys at the National Treasury have treated the South African Reserve Bank with so much respect. I have not heard anybody say that the National Treasury believes that the Reserve Bank must do 1, 2, 3.
Okay.
And because of that respect that the Treasury gives us, we stay in our lane and we allow them to stay in their lane. There is, however, a provision that says that the Treasury and the Reserve Bank must be in regular consultation with each other. That we do. And we have got formalized structures between the Reserve Bank and the National Treasury that coordinate things. We have got a structure on macroeconomics. We have got a structure on financial regulation. We have got a structure on banking and financial markets. We exchange views, we share technical papers, and we do that within the decorum that understands who is responsible for what. And that is how we do it. As for the coordination of the broader government, I think that that is the role that the presidency should and is probably playing. I am not privy to what they are doing in the coordination space.
Does this then sit well with you around the independence question of the South African Reserve Bank? As you put it, we stay in our lanes. Every single structure is responsible for their individual mandate. Is that okay with you in terms of that question that always comes up about the independence of the Reserve Bank, that you are given space, you are allowed to carry out your mandate as it should be done, and that at this point everybody's doing pretty well?
We are independent within the South African state. We are not independent of the South African state. What we do is what the South African state have tasked us to do. And we believe that we have done this to the best of our ability, and we have done it with the speed that is actually required, and that the coordination structures that we have, when you talk about staying within your, I said, we have got these conversations that we would have with the Treasury, and we would understand, for us to succeed as a country, okay, this is what you must be doing, this is what we have got to be doing. But there is this that worries me, that seems to think that our problems are purely fiscal and monetary. And there was a time when in this country that we had excellent fiscal matrix, and the economy was booming, and the economy was creating jobs. And do you know what? We still had the structural constraints. When this economy was growing at just about 5%, in the run-up to the global financial crisis, what did we experience? Do you want me to remind you? Load shedding, of course. And so the economy has constraints. So imagine, we had these constraints growing at close to 5%.
Yeah.
And now we are still having these constraints with an economy that is hardly growing. In the second quarter of this year, this economy was shrinking. And just as we thought in the third quarter, we are reopening the economy and the economy is starting to grow, what did we experience? Load shedding, of course. So these structural constraints, unless they are dealt with, you can provide all the stimulus you need. The economy will not be able to cope with it anyway because you have not dealt with what is really constraining.
Structural reform is a term that is bandied about, and you've also indicated that monetary policy alone is not going to help in the economic challenges that South Africa faces. In your view, then, what is it that needs to be termed under structural reform?
It's an area I no longer want to talk about because it's almost I must tell the Minister of Education, you must do this. I must tell the Minister of Transport, you must do this. I must tell the Minister of Energy, you must do this, and so forth. And once I do that, I get into the lanes of other people, and I get reminded, you must stay in your lane. Chief. It had happened before that we would say that, oh, we think there are these problems, and we get told, stay in your lane. And that's exactly what we are doing, staying in our lane.
Interesting. Staying in your lane seems to be a recurring theme, but as much as government departments, the presidency itself has advisors, many have asked who advises the Reserve Bank governor as well as its monetary policy committee?
There are 2,000 good men and women in the South African Reserve Bank. They are driven by nothing other than saving the South African citizens. Even under this difficult lockdown situation, we only have no more than 60 people in that building. The others are all working remotely from wherever, home or wherever they are, to make sure that they deliver on the mandate that we have. So, if anybody thinks about advisors, I have got 2,000 advisors in the South African Reserve Bank. That is my primary source of advice. Of course, as a governor, there isn't a shortage. The 54 million odd South Africans always offer advice too. We get letters and so forth. And when we engage in public fora with South Africans, they offer opinions. Some of them are practical, some of them are things that we are already doing, and others are just people who feel that, well, let me offer something. But my primary source of advice are the 2,000 men and women, may I say, good men and women in the South African Reserve Bank.
I'm glad you say that, because why I asked that question is at times we do seem to think that the Reserve Bank governor as well as the Monetary Policy Committee, when there is a meeting, all we expect to hear and we want to hear from you, Lesetja Kganyago, is interest rates, but there's far more to those meetings. Talk us through, at this point in crisis time, in times of uncertainty with the South African economy, given the global pandemic that is COVID-19, what forms part of debates even within the Monetary Policy Committee?
As I get to that, I must just say to you talked about the interest rate, and I will get to that. There is so much more that we are doing. People forget that when they go to an ATM and they withdraw cash, or they go to a merchant and they swipe their debit card or their credit card, the reason why all of those things work is because behind it sits the South African Reserve Bank national payment system. If that national payment system is not there, you will not be able to do all of these things. And we go out and make sure that it is working. And I know South Africans do not forget that we insert them ourselves in their pockets, in their wallets, through the notes and coins that we produce. That when you go to your bank and you have placed a deposit in your bank, you have got confidence that when you go and you withdraw that money, that your bank will still be there. It's because behind is a South African Reserve Bank that makes sure that banks act prudently, that they do not go play with your money and put your money at risk. Back to the monetary policy question, is that in arriving at this decision, there is a whole process of people. We just can't fit the 2,000 people in the one room, but they contribute in so many different ways. You know, on the first day of the Monetary Policy Committee, what you do not see in the
3-day meeting. Oh, yeah.
That there are, in that room, 60 of the finest economic brains that this country has with respect to monetary policy. They sit there, they present to us, and by the time they come, they present to us, they would have gone through data. They would have looked at research conducted by various other people. They would present that. And in addition to that, there would be people who would say, based on this data, this is what we think is going to happen to this economy in the next 2 years, the next 18 months, 2 years, 3 years. And based on that, the Monetary Policy Committee would say, based on all of these submissions from these 60 people who were in the room, who are backed up by another 2,000 odd people in the Reserve Bank, that they came to present these things to enable the MPC to make a decision. So when you are sitting at the MPC, you are going to process all of this information. And the decision that we make is informed by all of the views of these good men and women who are providing support to the MPC to arrive at a decision that, as far as we are concerned, will be a decision taken in the best interest of the South Africans. And amongst the many things that we would consider is, what is the state of the economy now? What do we expect this economy to grow in the future? What is the maximum rate that this economy can grow at? What would the growth now be relative to the maximum rate that it would grow at? What is going to happen to inflation tomorrow? And what should be the appropriate response of the central bank to a confluence of all of these factors acting at once? We've got to ask ourselves the question, what is the state of the global economy? How is the global economy going to evolve over the next 2 to 3 years? And how would it affect the South African economy? We have got to process all of that information. And that is why I need 2,000 people in the Reserve Bank to process that information and distill it for the MPC so that it can arrive, the MPC could arrive at a well-informed decision.
With a wealth of individuals that form part of the work of the Monetary Policy Committee, at this point in a South African economy that has been challenged for a number of years, you mentioned earlier on that the Reserve Bank is tied to its mandate. Is there scope in the South African government that the Reserve Bank's mandate could be broadened? And if so, how far wide could this broadening be?
Our mandate is actually very broad. People have got to read the Constitution. The Constitution says that the primary object of the South African Reserve Bank is the protection of the value of the currency in the interest of balanced growth and republic in the republic. In the interest of balanced and sustainable growth in the republic, understand that the authors of our constitution understood that if you are to have balanced and sustainable growth, it can't be balanced and sustainable unless you have got price stability. In other words, they understood that price stability is a necessary condition for balanced and sustainable growth, but it is by no means a sufficient condition for balanced and sustainable growth. And that is why you will find elsewhere in the Constitution that the Minister of Finance is tasked with particular responsibilities. And that is why you will find in other pieces of legislation in our jurisdiction, South Africa, that there are departments that are tasked with particular responsibility. You can't use monetary policy to solve transport problems. You can't use monetary policy to solve energy problems. You can't use monetary policy to solve infrastructure problems. You can't go on like that. Just as you do not ask the Minister of Transport to solve our inflation problem. He doesn't have the tools to solve our inflation problem. And may I say, if you were to ask the South African army, who are tasked with protecting our borders, and ask them to contain inflation, we might end up with something, because they might just try to shoot down inflation. And so, in our institutional setting, both constitutionally and legislatively, the authors of our constitution and our legislators deemed it fit to create particular institutions to be tasked with particular responsibilities. And it just so happens that the central bank, we might have been successful, and because we have been successful in what we have been tasked with, there is a legitimate expectation that, well, if these guys are so good and they could solve the problem that we used to have being inflation, surely we can give them a responsibility, another responsibility, and they could solve that too. And I caution against that. Society should not have unrealistic expectations of what a central bank can do. That's a conversation that is taking place globally. And we get given additional responsibilities. So in 2011, the National Treasury released a document called A Safer Financial Sector That Serves South Africa Better. That document was the genesis of the South African Reserve Bank's mandate of financial stability. It's a responsibility that we hadn't had before, but this was being done because the Constitution says that the Reserve Bank shall do such other things as are ordinarily done by other central banks, but such things must be spelled out in a legislation, and they are actually secondary to the primary objective. That's why the Constitution says the primary object of the South African Reserve Bank is that of price stability in the interest of balanced and sustainable growth in the Republic. To get balanced and sustainable growth in the Republic, we need all the other arms of government. Your point about coordination, that all of those have got to play their part for us to get that balanced and sustainable growth.
Balanced and sustainable growth is one that we have not seen in South Africa for a couple of years now. The economic landscape in South Africa is continuing to worsen, and I really say this as an ordinary South African who is economically active, not even thinking of the worst in a situation where maybe as a young black female, I'm not even economically active. And what South Africans generally would want to hear from you, Kganyago, is, are you, as the South African Reserve Bank governor, comfortable with the economic trajectory of the country, where we are going, where we seem to have been heading for a number of years now?
I don't think any South African should be comfortable with what this economy has gone through over the past 10 years. In terms of economic growth, the past 10 years has been our worst decade. The past 10 years have been our worst decade of economic growth. And so I don't think that any of us should be happy with that trajectory. But let's go look at that period of 10 years, what it was also characterized by. During that period, there was a government plan called Accelerated and Shared Growth Initiative of South Africa, which was aimed to bring growth to 6% so that we can have this balanced and sustainable growth. That document was finalized in 2007 and was starting to be implemented then. Many of the things it said are probably still relevant. In 2010, we had the new growth path. It raised important issues, whatever has happened to that document. In 2011, we had the National Development Plan, adopted in Parliament. It was supposed to guide us on a development path in this country. It had just been adopted. We started a debate about the document again. I can go on and tell you about the number of plans. We seem to like to generate plans instead of
implementation,
focusing on the execution so that we could deliver on what we have. I am not going to say to you what are the things that must be done.
You're going to stay in your lane, Governor.
Because these things are known. They are all kept up in those documents. Even this new recovery plan that will come, I can guarantee you, if it doesn't do the things that all of those previous documents that must be done, we're not getting anywhere. I can tell you, you can change the language, but it would be roughly the same things that we say must be done. The only thing that might change now is there is a big movement towards greening the economy, and now it might feature, but that is speculation.
COVID-19 brings about with it an opportunity or a gap for opportunities that exist in terms of lessons to be learned by the South African government. For the South African Reserve Bank, what is the biggest lesson that has been learned during this period? You talk about implementation, you talk about the mandate of the Reserve Bank, but critically, what is it that maybe you would want to take forward to close a gap, a loophole?
It's too early to even say what we have learned, because that would be presuming that this crisis is behind us. This crisis is still with us, and we are none the wiser about what the exact economic impact of this crisis is. And I'm sure there would be lessons that would be learned. For central banks, the lessons is always going to be the tools that you deployed. Can they be changed? Are there things that are missing in your toolkit and so forth? But it's too early to tell about what exactly are the lessons that would be learned. The global financial crisis was in 2008. Till this day, economists are still debating what are the important lessons from the global financial crisis. And I am sure, even at the time that we come out of this crisis, because for the next while, at least for the next 12 months or more, we should just be learning to live with an economy that is ridden by COVID and learn how to manage within that environment. No doubt there will be lessons learned.
Governor, I'm going to ask you to stay with us. We're going to take a short news break, and straight after that, we are going to delve deeper into questions that you have as a listener, as a viewer to the special broadcast of Power Business in partnership with Old Mutual. It is titled On the Money Talks, and indeed we are talking. We are also in partnership with the Mail and Guardian. We are live on both Power 98.7 as well as Capricorn FM. See you after this break. In top stories this hour, Defense Minister Lesetja Kganyago has reported.
invokes the COVID-19 pandemic, which she says left the ANC's delegation with no other means of travel. She also points Ramaphosa's attention to, quote, compelling national interests, which she maintains motivated the trip. It's yet to be seen if these reasons will satisfy her political opponents, who could push Ramaphosa to take harsher action for his party's rendezvous with Zimbabwean officials. Thomas White, Power News.
And lastly, various parts of Soweto and the Vaal have been plunged into darkness following the implementation of load reduction by Eskom across Gauteng. Areas affected include Bramfisherville, Dipkloof, Orlando and Stratford, with power expected to be restored at 10 this evening. Meanwhile, Eskom has welcomed the first of 6 new steam generators to Koeberg Nuclear Power Station. Eskom spokesperson Sikonati Manjanja says this is part of a major life extension system upgrade.
The first of Koeberg Nuclear Power Station's long-awaited 6 new replacement steam generators arrived at the plant yesterday. These steam generators weigh approximately 380 tons each and are about 20 meters long. The first 3 will be installed into Unit 1 between February and June 2021. They are being transported by road from Cape Town Harbour.
In your weather for tomorrow, Gauteng is expected to be fine in warm temperatures peaking at 26 degrees in Johannesburg, 30 in Pretoria and 27 in Vereeniging. Recapping the top story in Power News this hour, Reserve Bank Governor Lesetja Kganyago has defended the bank's move to not cut interest rates in the last monetary policy meeting.
In power traffic, starting off in Deep Slot, if you are traveling on Summit Road, just a reminder of that road closure between Dasi and Kudu due to a fire incident that happened in that area a bit earlier on. So try to use some Nandi as well as the R511, especially if you intend to travel towards the N14 highway. In Kaya Sand, the traffic lights are still out at River and Malibongwe Drive. Over in Modderfontein, traffic lights are also out at Centenary and Modderfontein Road, as well as in Lenasia, that's at Nirvana and the Golden Highway.
Power News.
Living in a digital, connected age opens up significant opportunities to improve and reimagine how people live, work and learn, but being connected through a proliferation of devices, particularly as remote working continues to grow, also opens up new avenues of attack for cunning cyber criminals. Find out how you can safeguard your sensitive information online with Microsoft's information protection solutions that help you discover, classify and protect sensitive information wherever it lives or travels. Visit Microsoft.com today for more information.
Why would you book your next VW or Audi service at one of our award-winning Hatfield VW and Audi dealerships? Simple. Our state-of-the-art facilities and no middleman policy means we do it right the first time. Nothing gets lost in translation, as your service advisor is the person who actually does the repair. The Hatfield Motor Group, award-winning Audi dealer group for 9 consecutive years and VW dealer group for 6 consecutive years. That's why you'd book your next service with us. hatfieldgroup.co.za. Rated #1 in service.
Attention all shoppers! Simplify your search for great service providers and traders on Yep, the newest online marketplace. View businesses near you like plumbers, locksmiths, woo, he looks great, electricians and so much more. All local, all vetted and all star rated. To ensure you get the best of great, simply download Yep from the App Store and find great today. Terms and conditions apply. Calling Chip Nail at front desk, nail tech needed.
Old Mutual on the Money offers local employers and trade unions access to free virtual
So it's not
financial
just me that's
education workshops for their staff, packed with practical tips to help their employees manage their personal and family finances as smartly as possible. Email financialeducation@oldmutual.com to book your free workshop today. Old Mutual Life Assurance Company SA Limited is a licensed FSP.
In the trenches of business, don't lose sight of the bigger picture. With Nedbank's expertise in cross-border transactions, we will facilitate growth through trade solutions while optimizing cash flow. To guide your growth, search Nedbank Bigger Picture Business Banking. We're an authorized FSP and registered credit provider. T's and C's apply. See money differently. Nedbank.
This special Power Dialogue is proudly brought to you by Old Mutual's On the Money program. Old Mutual Life Assurance Company SA Limited is a licensed FSP.
And welcome back to the special edition of Power Business with the On the Money Talks by Old Mutual in partnership with the Mail and Guardian. We are live on Power 98.7 as well as on our sister station Capricorn FM in conversation with the Governor of the Reserve Bank, Lesetja Kganyago. We've spoken a lot about the mandate of the South African Reserve Bank, the monetary policy stance that they are taking in the times of COVID-19. And at this point, we are going to go through a couple of questions with my colleague Tahila Nisilo that are from the platforms that have been provided for you as a Power listener to share your views and ask as many questions as you can. But for now, let's first hear from Dr. Padilu Huta, the former Statistician General, who had this view to share just last night on Power Business. We seem to be struggling with that audio. But Kganyago, Dr. Padilu Huta raised a question yesterday on Power Business, and he was asking that the statistical data that we see from Stats SA, in a way, it is not trickling down into policy decisions that are made within the MPC. Would you agree that there is even more of a collaboration that needs to happen with regards to that particular element?
Well, I don't know where. I've not heard what the voter had to say. We work very closely with Statistics South Africa. We do actually even assist in providing capacity in some of the research. There are statistics which, for the country to have, Statistics South Africa has to collaborate with South African Revenue Services and South African Reserve Bank. And we are a user of the data that comes from Statistics South Africa. It's a very important control measure. We are being measured according to whether we meet our price stability mandate, that is inflation, and that is why inflation is calculated by somebody else, in this case, Statistics South Africa. Because if we were to be calculating it ourselves, the temptation would be to calculate it in such a way that we meet our target, and that is why it is being done elsewhere, that being Statistics South Africa. Statistics South Africa basically runs the national statistical system. They are empowered by the Statistics Act, and they provide the statistics for South Africans. And in policy making, it's almost impossible to make policy unless you have statistics.
Well said. I'm going to invite my colleague Tahila Nisilo with questions from the webcam jam, and many questions have come through, Governor. Tahila, what sparked your interest here?
Good evening, Tumisang, and good evening, Mr. Kganyago. There's been an enormous amount of engagement around the conversations on air this evening on the various platforms. Let's go to the webinar jam first, where there was a question that comes in from Sianda Tabede asking, the Rand is often deemed the world's most undervalued currency. Is this beneficial or not to the South African economy? Also, another question by someone who would prefer to remain anonymous. It would be interesting to learn from the Governor, who does inflation favor or benefit, the borrower or the lender?
Governor, let's start with the Rand being undervalued. That question, how does it affect the work of monetary policy?
You know, at our most recent monetary policy committee, we did spell out that according to our models, the Rand is undervalued. If the currency is undervalued, the possibility is that it will revert back to what the correct value is. But when you have an undervalued currency, in an environment where you also have low inflation, if your inflation is less than the inflation of other countries, you become competitive. But in this environment where we had lockdown, we couldn't take advantage of that competitive gain from that depreciation of the currency. So if the currency is undervalued and inflation is contained, meaning that inflation is low and is in line with the countries that we compete with, that should actually benefit our exporters. But that will be provided that the world is open and we can sell to the rest of the world. And at the moment, it didn't matter that you had a competitive currency or a currency that is undervalued because there was no one to sell to. Countries were under lockdown. So that is how we think through the undervalued currency. But these things, I mean, we again, there are a couple of the financial institutions that says that based on the fact that the Rand is undervalued, they expect that the Rand will be one of the better performers of the currencies going forward. But these things all move alongside what other currencies are also doing.
The second question, sorry to interject there, Governor, I'm just looking at the time and being wary of that, but the second question is around inflation, and that would also bring into focus how inflation correlates with the performance of the Rand. Who does it benefit when these two are aligned?
That was exactly where I was going to, because she had asked two questions. And the question was a very simple one. The person was anonymous. And that question goes to the heart of the political economy of monetary policy. He or she asked the question, who does inflation benefit? Borrowers tend to benefit better than the savers from inflation. And that's because money today is worth more than money tomorrow. So for as long as inflation keeps rising, the money today will buy less tomorrow. So those who have borrowed, remember, they are able to spend the money today. And so they will benefit. When the money loses value in the future, they would have bought what they wanted to buy today. But if you are a saver and inflation goes up, you are going to be losing money. And what people will then tend to do is that they end up saving less. Because what is the point of me saving this money today if it is going to lose value in the future? And because of that trade-off, in a way, monetary policy role is to try and equilibrate what savers and borrowers do in the economy. And so the price of money equilibrates the resources that are available from the savers and what the borrowers are actually looking for. And that is at the heart. And you will find that in many development strategies, countries are faced with having to make a choice. Can I increase savings in the economy so that borrowers have got access to this savings? Or if I have to accept that my savings is not enough, I will have to go and access savings from another country. In other words, access international savings through capital flows and those kinds of things. And that is how one would view it. And so, put simply, even for the borrowers, whilst they might benefit from rising inflation in the future, remember what I said earlier.
Yes, sir.
The higher the inflation, the higher the interest rates are going to be in the future. And because of that, even in the long run, even the borrowers end up being losers. They might be the immediate beneficiaries from inflation rising, but in the long run, they too end up being losers because there will always be a situation where savings is not even enough to meet their needs.
Let's move on to the callers. Our power listeners are very engaging and they have a lot of questions of what has been said, Tahila.
Indeed, Tumisang. We've actually had some questions posed by economists who often help the listeners on Power FM understand the monetary policy decisions. Let's start with Duma Kobole, who's an economist, asking, South Africa is experiencing a once-in-a-century depression. Why can't the Reserve Bank cut interest rates to zero? By definition, there are no inflationary pressures during a depression. Regin Kosi, then, who's the executive director and head of research at First SO, says, do you perhaps ever think, Mr. Governor, you are wrong about QE. Others know of a model that give rise to QE. Are you ready to engage them?
Governor, cutting rates to zero is where we started initially. If you don't mind reiterating why it is that the Monetary Policy Committee holds its current stance.
Inflation is at 3.1%. Make interest rates zero and tell me, from what I had just explained to you, who will save? We need savings to fund investment in this country. And so it's something that one would not even will cut to zero. Not even the United States of America, which is facing the situation I had told you about the zero lower bound, do they have their interest rates at 0%? They have them at quarter of 8%, and they are facing a deflationary situation. We are not facing that. And so let me leave it there. As for Regin Gosi saying that I am wrong, well, you say I am wrong and you don't tell me why I am wrong. I hope that one day you would be proved to be right.
Is that the final answer, Governor?
Yes, I hope he would be proved to be right. He says I am wrong. I have explained myself. He says that we must do QE. I explained under what circumstances it would work. So he says I am wrong, and I have explained it. I think that I can repeat it back to the listener.
Yes.
And say QE is a tool that is available for the central bank. It can only be used under particular circumstances. And I felt under what circumstances it can be used. He says I am wrong. I would challenge him, name one country which has got inflation at 3-4% or higher that is doing QE and has got interest rates far from zero, and they are doing massive QE like the advanced economies are doing. So I am saying that one day you be proved to be right. As it stands, together with the 2,000 men and women in the Reserve Bank, we can tell you that having assessed all that we have in data, having scoured what has been done around the world, we are convinced that the position that we are taking is the right one.
I have no doubt that Regin Gosi is going to have a comeback on this one. Taylor, let's move on quickly to the questions on social media. Always a buzz.
Coming in on Twitter, thick and fast there, Tumisang Emmanuel Montwedi asking, can the Reserve Bank lend SOEs money, for example, Eskom directly or through the Treasury? Then power stations can be built at low interest rates. Surely this would be in favor of sustainable growth and remove the energy bottlenecks that inhibit economic growth. Another person on Twitter who asked to remain anonymous said, is there any truth that you, Mr. Governor, were approached to be finance minister and turned it down? You're not a politician, of course, but the story has been out there for some time.
Before we get to that juicy question, Governor, lending money to SOEs, we spoke about the energy crisis in South Africa and how it affects economic growth. How do you measure that, lending money to SOEs, especially if they're struggling?
Let's be very clear. Funding of Eskom is a fiscal decision. Fiscal policy is the preserve of the National Treasury and the publicly elected officials. It is not the preserve of the Reserve Bank. Our responsibility is monetary policy, which we utilize to protect the value of the currency. We are not into the lending of SOEs or of any of the corporate, private or public. We are not into that business. And the question that came on, if you could lend to Eskom, you could just wait and say that, why can't you lend to the Land Bank? Why can't you lend to the South African National Treasury? You could even turn and say that we have got COVID-19. Why don't you just give money to the Department of Health? That is not how a modern economy functions. And I'm saying that decisions about how SOEs are funded are fiscal decisions. And in terms of our constitution, there is one authority that can borrow on behalf of the government. It is the National Treasury. The Minister of Finance constitutionally has got the responsibility of borrowing on behalf of the government, raising money for the government and deploying it to the various priorities of government.
Have you been approached as, from the state to become a finance minister? Had that ever happened?
But I understand these appointments get made by the president. The president and I, we only talk economics, we don't talk politics.
And indeed, Anonymous is actually asking, well, I alluded to that you are not a politician. Your realm of thinking about political decisions when it comes to whether you would be approached in the future, is this something that you may think of?
I am a technocrat at heart. I have taken the challenges and battles of my people at a very early age. And when democracy set in, I became a public servant. And prior to that, I have served various formations that fought for liberation. And I remain a servant of our people. And my contribution to this country will always be a technical one. Politics is not a trade I want to play.
Tahila, anything else that sparked your interest?
I think that's a very definitive answer there, Tumisang. If we just now move slightly to the IMF, if we can, Mr. Kganyago, a question, Tumisang, from Lesetja Kganyago, who's the chief economist at IQ Business. He wants to know what the necessary conditions are for South Africa to go to the IMF, implying forced structural reforms through structural adjustment programs. And if I can just abuse the platform slightly and add my own question on there, Mr. Kganyago, you were a co-signatory to the letter to the IMF when South Africa went there for around 70 billion that we borrowed earlier this year. Are you happy with the way that Treasury is keeping to those conditions, particularly around transparency around the spending, as well as the debt levels that they committed to containing?
If you read the letter of intent, you will see that there are commitments made by the government, which is why Minister Mboweni had to sign. There are commitments made by the central bank. I signed for the commitments the central bank makes, not the ones the government makes. The government must do what it ought to do. That letter of intent was not authored by the IMF. It was authored by the South African government. It's the South African government that said, we are looking for this 70 billion rand, and this is what we would like to do with it, and these are the things we are going to do to make sure that you will get your money back in the future. And that is where one would be. Mr. Kganyago, under what conditions would South Africa go to the IMF? If we end up at the IMF, once again, remember, the authority that borrows on behalf of the South African government is the National Treasury. So it is going to be the National Treasury that goes there. But let's also understand under what conditions the IMF lends countries money. The IMF lends countries money because countries are facing a balance of payment problem. What is this balance of payment problem? This balance of payment problem means that you are importing more than what you are exporting. You do not have enough foreign currency to pay for the imports that you are getting because you are importing more than what you are exporting. And the IMF will lend you money to fill that gap. And so the IMF comes in to do the balance of payment support. But in assessing that, the IMF would also then say, what are the sources of your balance of payment problems? And they would then say, well, we think that you have got structural problems in your economy. These are the problems you have, and you've got to first commit to do these things and deliver on them. Here is the money, but you are not going to get the money up front. When you show us that you have made this progress, we'll give you this amount. When you have shown that you have made this progress, we'll give you a further amount. And when you have made this progress, we'll give you a further amount. I don't think that South Africa is there yet. And I think that the things that we need to do to avoid getting there are firmly within the control of the South African government. Those things are not easy. They might even be painful. But as a country, we must understand that in policy making, there are trade-offs to be made. So this notion that says that as South Africans, we can have everything we want, whether we can afford it or not, is not on and is not consistent with rational economic thinking. Every economy is having to make trade-offs, and those trade-offs that you have got to make could include, do I fund X instead of Y, or do I fund Z instead of W? Those are trade-offs the countries make. It could also entail having to make decisions that would necessitate us as a generation today to take pain in the interest of generations of the future. What we should avoid as today's generation is to allow the excesses of today's generation to put a burden on our children and their children's children, because we are refusing to make the difficult decisions that have to be made now. And I worry that in the South African policy discourse, we seem to not appreciate that in economic policy, there are trade-offs. And for as long as there are no trade-offs to be made, you probably do not need economics. For at the heart of economics is this, what we call the scarcity problem. Human beings have got unlimited needs and wants, but the means to meet those limited needs and wants, those unlimited needs and wants are limited. They are constrained. And that is why you need government to make those trade-offs. And if our discourse in South Africa, our policy discourse, could take to heart the fact that not even the United States have got unlimited resources, they are making trade-offs, the better the policy discourse in this country would be. So the notion that we can just put demands and demands and demands and think that abracadabra, we can just print money and the problems will go away is not on and is not consistent with any rational economic thinking.
A great way to end our conversation with you, Governor Lesetja Kganyago. Thank you so much for having given us your time. We continue this conversation with our panel, getting reaction and talking more about what it is that needs to be posed as questions to the South African Reserve Bank in times of crisis. A little later for the 7:30 news. Apologies to the newsroom.
Our Reserve Bank Governor Lesetja Kganyago has defended the bank's move not to cut interest rates in the last monetary policy meeting, further adding that the bank had acted appropriately in response to the COVID-19 pandemic. This comes amid expectations of yet another rate cut as the country continues to grapple with the COVID-19 pandemic. The Reserve Bank this month brought an end to a fifth consecutive interest rate cut this year, keeping the repo rate steady at 3.5%. The governor was in conversation with Tumisang Ndlovu in a special broadcast on Power Business this evening. In other news, Public Protector Busisiwe Mkhwebane has cleared Ace Magashule of any wrongdoing in allegations of a violation of the Executive Ethics Code while he was still Premier of the Free State. The DA in that province alleged that Magashule misled the provincial legislature in his written responses to questions from members on his involvement in the funeral arrangements of the late MEC of Health, Fundiswa Ngobeni. And the National Education, Health and Allied Workers Union says it will continue engaging with the government on condition that it abandons legal processes to nullify a 2018 salary increase agreement. The union held a special NEC meeting today after a sit-down with President Cyril Ramaphosa last week, seeking answers on a memorandum of demands handed over earlier this month. NAHAO says it is willing to iron out issues it has with government as long as they are resolved by the end of October. More details on these and other Power News at 8 o'clock with Thabo Molokwani. From myself, a good evening further.
Living in a digital, connected age opens up significant opportunities to improve and reimagine how people live, work and learn, but being connected through a proliferation of devices, particularly as remote working continues to grow, also opens up new avenues of attack for cunning cyber criminals. Find out how you can safeguard your sensitive information online with Microsoft's information protection solutions that help you discover, classify, and protect sensitive information wherever it lives or travels. Visit Microsoft.com today for more information.
Attention all shoppers! Simplify your search for great service providers and traders on Yep, the newest online marketplace. View businesses near you like plumbers, locksmiths, woo, he looks great, electricians and so much more. All local, all vetted and all star rated. To ensure you get the best of great, simply download Yep from the App Store and find great today. Terms and conditions apply. Calling Chip Nail at front desk, nail tech needed.
Yeah. Power 98.7 COVID-19 update.
Venues for exercise, recreation and entertainment such as gyms, theaters, which were limited to no more than 50 people, will now be allowed to accommodate up to 50% of their venue's capacity as determined by the available floor space, subject to social distancing and other health protocols. Existing restrictions on sporting events remain in place. The Independent Electoral Commission will be allowed to visit correctional centers, health facilities, old age homes and other similar institutions.
Power 98.7
COVID-19 update.
For more, visit power987.co.za.
In the trenches of business, don't lose sight of the bigger picture. With Nedbank's investment expertise, we combine our understanding of your business's cash flow with that of the market and our products to provide you with the most optimal outcome. To guide your growth, search Nedbank Bigger Picture Business Banking. We're an authorized FSP and registered credit provider. T's and C's apply. See money differently. Nedbank.
Has signed a code of conduct that is enforced by the Broadcasting Complaints Commission of South Africa. Under this code, we're committed to broadcasting news that is accurate, comment that is fair, programming that is not harmful to children, does not amount to hate speech, and contains no gratuitous violence or explicit sex. If you think we are not living up to that code, you may inform the Broadcasting Complaints Commission of South Africa. Direct any complaints by email to bccsa@napsa.co.za. For more information, please visit bccsa.co.za.
Old Mutual on the Money offers local employers and trade unions access to free virtual financial education workshops for their staff, packed with practical tips to help their employees manage their personal and family finances as smartly as possible. Email financialeducation@oldmutual.com to book your free workshop today. Old Mutual Life Assurance Company SA Limited is a licensed FSP.
Living in a digital, connected age opens up significant opportunities to improve and reimagine how people live, work and learn, but being connected through a proliferation of devices, particularly as remote working continues to
7:38, and we're getting into the last leg of this On the Money Talks conversation, a special broadcast right here on Power 98.7 as well as on our sister station, Capricorn FM. It is in partnership with Old Mutual, along with the Mail and Guardian. Thank you so much for staying with us and engaging with us. We are now going to discuss in a panel form what exactly came out from the Reserve Bank Governor, and many are asking questions about magic money. On our panel this evening is economist at IQ Business, Fiso Skenjani. Thank you so much for giving us your time.
Good evening to me.
John Manyike from Old Mutual is also going to talk to us about what just transpired. Thank you very much. Johan Els is an economist at Old Mutual. He joins us too on this panel. Johan, I'd like to start with you. Magic money, abacadabra, as an economist, what is your reaction there?
Well, QE has worked well in the US. It's worked well. I do agree with the governor that it's probably not magic money in South Africa. It's a very valuable tool. And I think there is a scenario where you can sketch that in South Africa we can actually use that. And Governor, I'm not saying you're wrong. There are many different opinions here. You know the joke about economists who've got two hands on one hand and the other hand. I think there's a scenario in South Africa where you don't have to have interest rates at zero before you do QE. But I think one of the preconditions should be government implementing economic policies to get to a higher growth path. Because under that scenario, you've got a vision of getting the fiscal position under control. In other words, budget deficit lower, trying to stabilize the debt ratio. If it's implemented, then the Reserve Bank can come with a QE package for a limited period of time to help lower the longer-term interest rates. We talk in South Africa about the yield curve that's too steep. In other words, the short-term interest rates very low, but the long-term interest rates where government borrows too high. And if the Reserve Bank, under that set of circumstances, come in with QE, we can lower the longer-term interest rates, cheaper borrowing costs for government. But then there's a scenario where we're working towards improving the fiscal position.
So would you agree there, and particularly around when I asked the governor if they are satisfied at this point with the measures that they've put in place to mitigate against the economic impact of COVID-19? There's the bond buying project. There's also been the slash in interest rates. Is that enough?
It was quite interesting just hearing the governor talk about the various tools that they've got. One is a liquidity tool, which is actually effectively QE.
Yes.
And in essence, it's them saying that they're just trying to stabilize the long-term bond yields. And when you look at the context of what should happen, is that if in the last 2 years or so, the market stopped believing the story from South Africa. Inflation was trending downwards, but bond yields were trending upwards. That decoupling doesn't happen unless they don't believe the quality of the information that you come out. And last year, we revised our growth expectations 7 times.
Yeah.
And therefore, it's clear, and we've heard from S&P, Moody's, etc., that the economy itself is not structurally capacitated to grow, simply, right? And while we also understand that then they're saying that they're playing on the demand side, is that there's compressed demand, but where I agree is that it's clear that when you've got stagflation, or the stagnant growth and a little bit of inflation, monetary policy becomes ineffective as a mechanism to drive sustainable growth. The only challenge I have to the governor is when we talk about the mandate of the Reserve Bank. It's price stability in the context of balanced and sustainable economic growth. The challenge with price stability in the South African context is that it's informed by many structural issues, right? If you don't have export competitiveness, you can't have a currency that is self-defining. We've got capital flows, 60% of which leave the economy in less than 2 years. And so our currency volatility is informed by so many things besides monetary policy. And therefore, we don't actually have sovereignty of our currency as much as we believe we do. And for me, that's where the broadening of the mandate beyond just price stability, in understanding that there are certain mechanisms that can be put in place to ensure that capital becomes an enabler for sustainable development.
We're going to dig more into that. And John, for you, we need to speak to the ordinary South African within this conversation, in that as a mortgage payer, the 300 basis point cut in interest rates is working extremely well for me. And when I asked her earlier, for somebody who simply is not at a point to even afford those repayments, we are facing job cuts, we are facing salary cuts at this point. Are these relief measures working for the ordinary South African? Because we do need a change of mindset as consumers. We've been tightening our belts, and I always make the analogy that as tiny as I am, I do not have any holes anymore, hence I don't wear belts.
Yeah. So, no, fair enough. I think to a degree, and I like the fact that you mentioned the mindset, because the reality is there is some disposable income in the hands of consumers, particularly those who had mortgage. So if the prime lending rate is less, it means there's actually more money. The question is, what do you do with that money? It's the same question that applies where a consumer who happens to be gainfully employed, and when they receive an increase above inflation, the question is, do you use that money to offset your debt, or do you use it to save, or do you just go and spend more? So until such time that we actually get this right from a consumer perspective, where rather you use this additional disposable income that is unlocked by a lower interest rate, then unfortunately we're not going to get out of the situation anytime sooner. This is the right time to be charging down your debts when you actually you know that you're actually getting a bit more because of lower interest rates. Yeah.
A valid point there, that we are not going to get out of this anytime soon, John. And that point, Johan, speaks to the structural reforms that we need to be discussing, or at least receiving to implement as a South African public. What are you expecting from the document that we are all awaiting? Another plan that is going to seemingly look at how South Africa gets or jumps out of a post-COVID-19 economy. Is that even possible?
Yes. So, a step back. The lack of growth in South Africa is our problem number one. The governor mentioned the weak growth over the last 10 years, but over the last 5 years, annual average GDP growth was just 0.8%. That's almost nothing. So we need to get out of that, and as the governor said, we need to stop talking about the plans and implement. And of course we're disillusioned, and so as your question suggests, that's the first thing we expect, another plan that's not going to be implemented. I'm hopeful though that this time around government realizes the urgency. We're in a deep crisis, and that's why I also don't think the bank has done enough. They could do more, and we can discuss that if we have time. But in terms of the plan, load shedding, that's the first thing. We need extra energy. The spectrum sale that is on the cards, that will help unleash some extra growth. But I think in South Africa, we need to boost confidence. And the one thing that we can do to boost confidence is radical restructuring of state-owned enterprises. And by that, I should say I include privatization, because that'll boost confidence. I'm not hopeful that that will happen. If it does, even if we get no money for selling off some of the state-owned enterprises, it'll boost confidence. So the president has been open about this. Bring in the private sector more and more. So that should be part of such a package. And I think unleashing confidence, get confidence back up, because in the good growth years, under this government, under an ANC government, we had 5% plus years growth in the years 2004, 5, 6, 7. It is doable if you have strong confidence. So we need to drive confidence, and privatization as a policy could be a big driver of that confidence.
That confidence also speaks to a trust deficit, Fiso. As a South African public, there is a seeming sentiment that government is not doing enough, and that question comes with the South African Reserve Bank, in that there are calls for even further to be done. And you mentioned the mandate of the South African Reserve Bank and how it could be expanded. One of the questions that I asked the governor is there collaboration between the Finance Ministry, the President's Office, as well as the SARB? At this point where we are all sitting, like he said, everybody must stay in their lane. Is that feasible going forward into creating a new economy for South Africa?
Absolutely not. One of the first things that's going to be an enabler for our growth is social compacting, right? And we found ourselves in an economic history where corporate has had a hostile relationship to public sector, labor has had a hostile relationship to both corporate as well as public sector, and then community has had a complex relationship with all of those, right? And until we move towards a framework that enables social compacting, I mean, we've got an estimate in excess of $1 trillion of cash balances pre-COVID that corporates were sitting on, right? Yet some of these corporates were able to benefit when we were still investment grade on that kind of sovereign rating to be able to borrow at rates that are lower than at which they can invest. Yet they're saying they weren't driving capital into economic activity. So no one is without blame in the context of how we've tried to participate as an economy. And so social compacting is certainly going to be the first lever that we ought to pull. But I think there are other things that are going to be increasingly important around particularly the development project for South Africa, right? And the development projects focuses on poverty alleviation. And we know that poverty is multidimensional. There's a health issue, there's a nutrition issue, there's education, there's social capital, right? We study in South Africa that the time it would take for income convergence to take place, and so between white people and the lowest of the black people, was 22.9 years.
Yeah.
And therefore, we've got a lot of structural issues towards the development agenda that focus on human capital development, that focuses on an economy that doesn't become disillusioned to the people it's supposed to serve, which is the young people, with an extended definition of unemployment in excess of 70% for young people. And you look now, we saw 5.2 million people going out of labor force participation. 60% of them was aged between 15 and 34. And so, which means the structure of the economy is not responding to the needs of the people who are going to inherit the economy. And so one of the examples I've made is that if you look at the mature sectors in the economy and the informal sectors, they actually mirror themselves. And so automotive in South Africa is one of the most mature manufacturing sector, and one of the largest employers of young black men in the informal economy is mechanics and all of that stuff. It's same thing applies to personal care when we saw Clicks saying that one of the things they're going to do to deal with the racism issues is to open up the supply chain for more participation of informal businesses. And we can go into retail and spaza shops and the big retailers. And so we've got these markets that mimic themselves. And so how do we ensure that we leverage policy to ensure sustainable participation and growth from informal market into more formal parts of the market? And these are the people who are going to be the most employers of people in general. And so it's understanding that there are levers that are very useful to driving the capacity building program for the economy. And I think that, for me, will be the thing that actually enables us to build out of the current rut that we're in.
You've touched on matters that hit to the core of barriers to entry for an ordinary South African. How does this sentiment, John, filter into a lack of participation or a reduced participation within the financial structures? Because we come to the likes of Old Mutual to try to safeguard our money, safeguard our futures, but if it's not there, or if there are barriers to entry that create that we do not access those tools to better our lives, what happens to the financial system? And COVID-19 comes as a perfect opportunity to display exactly that.
No, absolutely. I think this begs the question whether we've made good progress as far as it relates to financial inclusion, especially at the grassroots level. So I think we might say perhaps from an access point of view, those who are unbanked, there's certainly been some improvement, but the question is there quality in banking? I mean, do people just open accounts, just to receive, and they actually don't transact beyond that? But I think there's certainly scope for more financial education in the country. But more importantly, I think it also talks to the issue of do we really have a culture of entrepreneurship in the system? Because I mean, economies around the world, the ones that are doing well, they're quite big when it comes to SMEs and all that. So and again, I think the role of creating jobs is not just government. I think all the different role players have a role to play there. But I also believe that it needs to start with dealing with the issue of creating a culture of entrepreneurship, creating opportunities and making it easy for people to actually do business. I'm talking about small business in this case,
The opportunity that comes with COVID-19, and from the manufacturing side of the world, they keep reiterating that this is a time where South Africa needs to be number one, producing local. From a perspective of an economist, Johan, how likely are we to speedily harness a situation in the South African economy, given the challenges that we have, to accelerate that part of things?
Yeah, that's the difficult part. I don't think we're going to get there quickly, because a big part of the structural adjustment policy that we need is, of course, deregulation of the labor market. And that's not easy, given the union's strong stance against that. Let me refer to the World Economic Forum's Global Competitiveness Index. Lots of negatives in that, and the stuff where South Africa suffers is in terms of the education and labor issues. And of course, stuff like absolutely, we've got a conservative central bank, and that's a very big positive in that same survey. But the reason why we don't get the FDI, foreign direct investment, foreign investors coming and building a factory in South Africa, producing stuff here with local labor, is because the perception amongst foreign investors is that local labor is militant, uneducated, and expensive. And whether that's correct or not, you and I don't have to agree, but that's the perception amongst the foreign investor. So yes, we get the inflows in terms of the portfolio inflows. They make money in our bond markets, etc., in our equity markets. Those are the volatile flows. When the flight to back to the US in terms of flight to quality comes back, those money flows out. So that's one of the big issues we need to fix. So in answer to your question, we probably won't be able to fix our manufacturing sector to be a producer for the rest of the world, given, as you asked earlier, on a competitive currency that would probably help in that environment. So we're some way off that path, and for that we need reforms on the labor side as well.
We are not attractive. You mentioned it first. We are not selling a good story, and we once, as a country, had that slogan, we have a good story to tell. South Africa's open for investment. There's a big investment drive. How do we then curtail all of that, because we are selling two different scenarios on paper and what comes out of what is said?
Well, we are attractive in certain ways. And there's what we call the revealed comparative advantage. And if you just look, UNCTAD's got a lot of data around that. And we've got sectors in which there's a low opportunity cost for South Africa to produce those goods. We're number one exporter of citrus, number two or number one exporter of macadamia nuts, and we can keep going. And those are the sectors where we can actually build a lot of capacity, where we've got a revealed comparative advantage. Interestingly enough, the World Bank and World Economic Forum in 2007 actually said our labor laws were restrictive, came back in 2016, said they actually realized our labor laws are the best contributor to less abuse for labor participants. There's a labor union premium in South Africa about 20%, and most of the people who are unionized are in government, and that's why there's lowest wage inequality in government. And so in private sectors, about 24% of people who are unionized, and that's why the largest driver of inequality in South Africa is wage inequality. And so labor unions, given their history starting in 1925 during the Rand Rebellion, have actually become very monumental for labor equity in South Africa. And so this idea that our labor laws are rigid, for me, I can't identify with, because it's only that they're seeking to hire and fire easily. When we've already got structural impediments that entrench oppression within the workplace. And so the idea around that labor laws are certainly the restrictive part of our growth and our capacity building is certainly, I think, a part I would certainly challenge.
A fallacy. But anyway, we're going to wrap it up with you, John Manyike. The importance of having such conversations with the Reserve Bank Governor. What is it for you and for the general public in South Africa? I indicated that it's not every day that we get to speak to Re Kganyago in an open discussion. It actually even opens up his office to that stereotype of them being too conservative on the social side, at least.
No, look, I think it's very important for people to understand the financial systems and all the different role players there. And I think if there's one thing that I think the governor has done well is to actually explain the different roles played by government and the role played by the Reserve Bank. And I think that's very important. But I think it's also a very good debate to have this conversation about printing money, So, I mean, economists always have different ways of looking at things, but the reality is that perhaps, as much as he did mention that, I mean, under certain conditions, yes, but maybe the debate should be around the extent, perhaps, at which that can be done. But it is certainly not a magic one that you can just print money. But here's the thing. So if you want to rely on just printing money, you are also going to be inviting inflation, because you're going to undermine or devalue savings and investment in the country. And once you invite inflation, then you've got other problems, that, of course, that we wouldn't want. So I think it's a very important discussion to have, perhaps from time to time with the central bank, understand their role, but not only central bank, there may be other organs of the state, and understand. But also, I like the question raised by my colleague here about perhaps the expanded mandate of the Reserve Bank. And I think these are very good debates or discussions we should have on whether it is necessary, and if so, to what extent.
Thank you so much, gentlemen, for being a part of this conversation. Thank you as a viewer, a listener of Power 98.7 and Capricorn FM for this special edition of Power Business with the On the Money Talks supported by Old Mutual as well as the Mail and Guardian. It's a wrap from us as a Power Business for this Wednesday evening. I must thank you also for indulging me. It is back over to the studio that is for Power Perspective right here on Power 98.7 with Thabiso Kotane. Tomorrow we are back to factory settings, as I've been joking the entire day. This is not what I look like on a daily basis. Until then, I never rock.